Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Thursday, June the 7th, 2012. Now, just bear in mind that the candle that we're analysing here is the second last candle on this chart. That's a complete candle. The candle that we're looking at the moment, which is quite bearish at the moment, and looks like we have a change of trend to the downside, is still developing. So we can't analyse that candle until the candle has finalised trading tomorrow. But it certainly is looking quite bearish. But looking at the candle that's finalised trading today, and we have a spinning top type candle at the end of this uptrend. The trend continued to the upside, and this area at 125.86 was an area that I've highlighted previously as a potentially strong area of support and resistance. We can see here on these 3 occasions and 4 occasions here where the market's attempted to trade to that level, and there's been selling coming in. We have these large shadows on the top of these candles representing the buyers losing commitment up around those levels. For today's trading, the buyers once again lost commitment around that level to close the market below there. We have had the market today close just below the midpoint level and the low, meaning that the sellers have taken control of this market as opposed to the previous day where the buyers were in control. We have had a change in supply and demand. In terms of the previous day, the buyers were firmly in control, showed strong commitment, but failed to close above the important 125.86 level, and today we have the sellers take control for the today, but we have an indecisive spinning top type candle with strong rejection from above the 125.86 level has set the market up for a change of trend. And looking at the way that the market is developing today, we've seen that change of trend here today. Now, bear in mind though, that's not complete. This market could rally to trade up past the high of that candle, although I doubt that it's likely, but it could, and that would mean that the trend hasn't changed. But if the market continues as it is at the moment, we would have confirmation of a change of trend and potential for the market to trade to lower levels. Now, if the market does trade lower over the next few days, we do have potentially strong support at 124.55. No major support until the market trades down to 122.87 and below there 121.55. So if the market continues selling off, we could see substantially lower levels. In terms of the Fibonacci extension, and we're looking at the upswing that the market was in at the close of trading today compared to the previous upswing, and here once again this highlights how well these Fibonacci extension ratios work, and we saw the market interact exactly with the 261.8% level. Indecisiveness at that level set the market up for the potential change of trend. We've had the low taken out and the market is bearish and looks as though we will have a change of trend. So that level at 126.22 for the 261.8% retracement and extension has worked very, very well. In terms of the Fibonacci retracement of the previous downswing, and we're looking at the upswing that the market was in, we've traded exactly to the 100% level, and we've seen that indecisiveness come in and once again set the market up for a change of trend, and we've seen that change of trend. So this confluence of the two Fibonacci ratios at this 126.23 has proven to be too much of a barrier for the buyers to trade through. We saw capitulation there with the spinning top type candle, and now some follow through by the sellers today with a bearish market, although remembering, I must say once again, that the market hasn't finished trading with this current candle yet. In terms of Ichimoku, as with the equities market, this market is bearish in the long-term and medium-term time frame by trading below the cloud and the Kijun-sen, the pink line, but bullish in the fast-term time frame by trading above the Tenkan-sen. The Chikou span is below the corresponding price action, so confirming negativity that we're seeing in the market. Summing up, we have a market that's bearish in the higher time frames. The buyers are no longer supporting the trend to the upside. If we look here at the configuration of the peaks and troughs, we have a peak, a trough, a lower peak, a lower trough, a downtrend established at that point in time, continuation of lower peaks and troughs. Here we have the market testing to one of these peaks, and it looks as though that area will hold, and we have resumption of the downswing in that second time frame downtrend. So potential for the market to trade to lower levels. The next level that we should be looking at is a minor level here coinciding with this minor swing low around 125, but then certainly the 124.55, an important previous area, has potential to offer itself as some solid support, and then no major support until the market trades down to 122.87.